heir of your estate will sell the home, pay the reverse mortgage off, and put the equity back into your estate. It's no different than if you went and had a $800,000 house and you got a $400,000 loan if you qualify for it.
To My Divorce Real Estate, and today we're talking with Bob Duane about reverse mortgages. And today we want to jump into this topic about reverse mortgage because we found out it is a very useful tool for people that are going through divorce. And if you're 62 and older, it's a great tool that we can use for you. So me and Bob are going to talk about a little bit of the aspects of the reverse mortgage and what their benefits, and rule out some of these myths that have been out there about the reverse mortgage.
Scotty, thank you for having me. I'm excited to be here. I am one of those persons that went from a skeptic to a huge fan about reverse mortgages. When I first heard about reverse mortgages, all I heard was bad things. And so I actually had a financial planner call me up and say, what do I know about reverse mortgages? And I said, Dave, they're bad. Stay away from them. And he said, you're supposed to be the mortgage expert and be able to tell me stuff, figure it out, and hung up on me. And the next thing I heard was this dial tone. And so I took that as a personal challenge, and I did research to find out that I was wrong, and taken some information and because I didn't know about it, I thought it was wrong. And here's what I found out. I started doing the research, and the first reverse mortgage that I ever did was for that financial planner's father. After I did the research. And I've gone from a huge skeptic to a huge fan with this caveat. They're not for everybody, but they fit. And today, the baby boomers are 10,000 baby boomers a day are turning 62 every single day in America. And, I'm a baby boomer. So I grew up being told, to always pay your house off so that you're, if you pay it off so that you can own your home free and clear. Well, a lot of people, they do that because their parents told them to do that. Mm-hmm. Then their equity tied up in their house. And then they're living with, they can be living in a $750,000 or $1 million house and be poor because they have no lifestyle money. Here's how a reverse mortgage works. If you're over 62, both of you in the state of Texas have to be over 62. But if you're over 62 in the state of Texas, and you have equity in your house, you may be able to tap into that. The most common tapped in way is a line of credit. You can get a lump sum, you can get a line of credit, or you can get a monthly payment amount, just like a Social Security check. 99% of the reverse mortgages I've seen are doing the line of credit. There's a lot of reasons why. One is any money they take out of the house is tax-free. Number two is if it's in a line of credit, that line of credit grows right now at like 5.5%. So if it's $100,000 line of credit, next year it's $105,500 line of credit, and it will grow if you don't tap that line of credit. So here's the difference between what most people understand as a home equity line of credit or a regular mortgage versus a reverse mortgage. Reverse mortgage, you do not pay payments back. The interest in principal accrues over time, so the balance of the mortgage goes up over time instead of you making payments to bring it down. The good news of that is, Scotty, that gives you cash flow. It's a $2,500 a month house payment, and that goes away. That's $2,500 cash boom that they have. If the house is paid for, and I see a lot of I see a lot of seniors that they have a home that's paid for, they get all this equity in there and they can tap into that equity. I tell people a good rule of thumb is to think about, if your home is worth $800,000, you can probably tap into about 50% of it. If you think in terms of that, a lot of people, when I tell them you qualify to get $400,000, the house is worth $800,000, correct, but you never tap into the full amount because that payment's going to accrue. And the positive is there will always be an inheritance for your heirs, because you get to live to both of you have permanently moved out of the home, moved to a skilled nursing facility or assisted living or something to move out of the home permanently, or deceased, and then 12 months after that, the reverse mortgage is due, and your heirs, whoever's the heir of your estate, will sell the home, pay the reverse mortgage off, and put the equity back into your estate. It's no different than if you went and had a $800,000 house and you got a $400,000 loan if you qualify for it. A lot of seniors don't qualify for a $400,000 loan because all they have is Social Security. A lot of people don't have retirement today, so they may not even qualify. A reverse mortgage is not based on credit qualifying. It's based on these things. One is there enough equity in the home? Number two, have you paid your taxes and insurance and homeowners association dues on time for the last 2 years? If you haven't, there's ways that can happen, but it's called a LISA, which is a lease set aside for taxes and insurance. But so if you get a $400,000 line of credit and you pull 100 at closing, you still have a $300,000 line of credit that will continue to grow with the credit line growth. That changes every day with the interest rates. The same way interest rates change, the credit line growth will change. But the biggest advantage is if somebody is cash flow poor, this may be a great way for them to have enough money to live on. And they've got an equity in the house. They always pay their insurance and their taxes separate, and that's they still do that afterwards. But 72% of the people that take a reverse mortgage out, Scotty, are financially literate people. One of the myths that I thought was that if they take a reverse mortgage was the last effort. That's the furthest thing from the truth. It's people that know how to manage their money and realize I got a great asset. And I'm going to ask this, have you ever known somebody that's got plenty of money? They're really good with their money, and car interest rates are zero, and they could easily pay cash, but they are financially astute. They say, I bought the car with 0% interest. I'm making payments. It's not costing me anything, but I got my money that I would have paid cash in investments. That's financially astute people. Most reverse mortgages that I have been involved with, the people are astute. They understand that. And there's three ways. We're going to talk about divorce in a minute, but you can take a reverse mortgage out of your house to have that's called a traditional regular reverse mortgage. There's now reverse mortgage for purchase. So if you live in an $800,000 house and it's too big and you want to downsize, you could sell that house and buy, these are just rough numbers, but use a reverse mortgage to purchase the new home. And let's say you bought a $400,000 house, you could move in without having to ever make any payments on that house. So those are some of the benefits of a reverse mortgage. And then obviously the other way to look at it is a regular reverse mortgage, a reverse mortgage for purchase, and then reverse mortgage if you're one of the people that are what I call senior divorces. They're over 62 and they're going through a divorce. A reverse mortgage, if they have to, most people at that time have a lot of equity in their home, and the ex-spouse wants part of that equity. We have figured out how to do that, and most other people that do reverse mortgages don't understand how to find a multi-lien or a buyout lien in other states so that it could be paid at the time of the closing. A regular traditional reverse mortgage, if you qualified for $400,000, you'd only qualify for about 50% of that the first year. So you could only tap into $200,000. But if you go through Scotty and he understands the divorce lending aspect and files the proper lien using their attorneys on either in Texas as an OLTI or in other states as a buyout, you could tap out and buy your spouse out completely. We've done that several times, and that's a huge benefit to people that are going through a divorce at this time.
Yeah, man, Bob, you're just like shooting fireworks of information at us, and so like
sorry, it's too fast.
It's really good. So people, you got a lot of information to share, and I really appreciate that. Let's take a step back because this is at the very beginning, you said something that I thought too. You thought, hey, these are bad. These aren't good for people. Like they're, and like say, the caveat is they're not right for everyone, but you always look at the situation. And, you know, when you talk to a mortgage specialist, you go, hey, what is right for you based on where you're at, right? So, and we'll bring it up when it's right for those people, right? So you meet the age criteria and you don't got enough money maybe, and you have a lot of equity in the home. Maybe it makes a good sense to stay in the home. Whether you're just of age or you're going through a divorce, both those situations can make great use of the reverse mortgage or just reverse mortgage buyout, right? So either case, it is a great tool to be using. And one thing that I assumed too, right, wrongly, was that you are going to eat up the equity, right? And then, you know, we go and actually look at the tables of how much money is left over after so many years, and it's just it's not like you're like house poor all of a sudden, right? No, there's still a lot of money left in the home for two reasons, right? One, because the mortgage company doesn't want to over leverage, right? And then the other is that the homes are appreciating. So
The home's appreciating, so there'll be money to go into your estate. The first question I asked someone that asked about a reverse mortgage, I said, tell me about your house. If they go, well, it's a lake house and it was my parents and I inherited it from my parents and I want my kids to have it, they're not a candidate for a reverse mortgage. First question I ask, if they go, well, my kids live in other states and as soon as I die, they're going to sell this house. That passes the first bar. I mean, if it's emotional and a kid wants the house, you could still do a reverse mortgage and the child could pay it off. But I want to make sure that we're setting them up for success in the future. The real idea of a reverse mortgage, it's backed by, there are reverse mortgages are not backed by HUD, but most of them are backed by HUD. And the good news is that if you live to be 140 and you ever owed more than what the house was worth, HUD pays a difference. Your heirs never come back and pay anything extra. They're not responsible for anything on your reverse mortgage. That's a myth that a lot of people, you know, they've heard this. The myths or some of the bad things that were said about reverse mortgages really started in California, where financial planners were taking people that had a lot of value in a house. They do a reverse mortgage and they're taking all that money and investing it. And a question that's on every reverse mortgage application is, are you buying financial annuities with this? Because that's not the goal. They don't want to take your equity and put it at risk. It's your equity. You get to do with it what you want. It's important that you understand that it's really no different. People will go, well, I'll get a regular mortgage. And I'll say, well, you can't, then you're really going to be cash poor. Mm-hmm. And they don't get that because it's a way of thinking. I like to ask people this question. I'll ask you this, Scotty, and you may know the answer. What color are yield signs? Signs.
Red.
Okay. You're right. And I should have asked this question, but if you ask people that are listening to this, a lot of people, you thought about it for a minute, and a lot of people will say yellow. And they'll say yellow because they learned how to drive, and yield signs have been red and white since 1987. But when I learned to drive, they were yellow. So when I was asked that question, I said yellow. And I've asked policemen that learned to drive before 1987, and they'll say yellow because they'll think of it, because you yield, you think of the light, you think of that, your mind, that place. Reverse mortgages are the same thing. You need to be educated about them. The most important thing is to know all the options. Make sure you're talking to somebody that's telling you the upsides and any potential downsides, which I think are very few, but there are some. And here's two of the biggest. You got to be able to pay your taxes and insurance and pay those on time. And you have to do that anyways. So again, I've used this example with people. When I learned out what a reverse mortgage was all about, if my parents were still alive, I would have put them in one. Norma's parents, my wife, they didn't need one. And it just determines if someone needs it, if they have a lot of equity in a house, that's their main asset, and they don't have any other way to live comfortably and to live. Some of the things that we've done, I'll just give you a couple quick examples. I know we're over time, but
No.
I'll give you a couple quick examples. One of them was a lady who wanted to help her granddaughter in college. And so she was able to get a reverse mortgage to do that. We've got a reverse client that wrote us a beautiful letter that said they used some of the money they got out of the reverse mortgage to fix up their house, but to get hearing aids. And they got the expensive hearing aids. And they wrote us this loving letter about how great it was. And I've had people take trips of a lifetime to be able to do things. They're not going to Vegas and gambling their money away. It gives them peace of mind and security. And a lot of people have used it to supplement or to be prepared for retirement. We've done several where people know that when they get 62, they want to do a reverse mortgage, so they get prepared that pays the house off and that they have no house payment. So reverse mortgages are potentially possible if you have enough equity to get rid of your house payment. Obviously, if you're buying someone out in a divorce, you need more equity than that. But the whole idea is to put them in a position that they're in control. Here's a couple things people don't know about a reverse mortgage. You want to pay any payment towards it, you can pay it anytime you want. If you come into an inheritance or win the lottery or anything, you can pay it off or you can pay the interest on it. You're not paying, remember, it's tax-free money. So any money you take out, you're not paying taxes on. So there's tremendous advantages. And what I suggest is find out if it is a potential help for you. And if it's not, you need to go to someone that's willing to say, this isn't a good idea for you. But if it is a good idea, then you should check out and know all your options.
That's great information there, Bob. And like one thing that I want to circle back to again that you said in that discussion was, you just need to make sure you can pay your taxes and insurance. But like with any mortgage, if you don't pay your taxes and insurance, you're going to get in trouble too. So there's not any other risk or different risk with that. And then the other one was, you said at the kind of beginning, was the credit scores, right? Which isn't.
Go ahead.
Yeah. So like the credit scores really don't matter too much about when you get in a reverse mortgage, right? It's not like if you're qualifying for a mortgage, your credit scores are going to matter a lot more than if you're getting a reverse mortgage, right?
Correct. Credit score is not a determining factor in a reverse mortgage. What is determining, have you paid your taxes, insurance, and HOA, if you have an HOA. And we do there's a residual income formula to make sure that you got enough money to live on. The last thing a bank wants to do is to do a reverse mortgage for somebody and have to do a foreclosure. So they do the residual income, which is what is done on all VA loans, is to make sure they got enough money to live on. And takes a utility, suggested the formula figures what are utilities average in your area and figures all that out to say, can they live comfortably and still pay their taxes and insurance? So if you had an issue in the past and your credit's not good, that does not eliminate your ability to potentially get a reverse mortgage.
Excellent. So that's great information there. I think what we'll do is we'll do a second little video just kind of talking mostly about the divorce aspect and that ability. So we'll check out the next video coming up right after this, and we'll check with Bob Duane. Thanks, Bob.
Thank you.